In this video, we're going to talk about Rivian. They reported their earnings this past week, and the stock price was fairly muted despite the company missing revenue expectations for the quarter. The market reaction suggests that investors may be focusing on other aspects like production ramp up and vehicle deliveries. For example, last month the company said there was a production disruption due to the shortage of a shared component on the R1 and RCV platforms. Though the company now projects a wider loss than expected for the year, it did maintain its full year delivery and still sees a modest gross profit for the coming fourth quarter. Now, for those who don't know, the company went public in November of 2021 and price got as high as $180. And at these astronomical prices, the market cap was higher than GM and Ford combined. Wall Street came to their senses, and since price hit that $180 level, price has been in a down spiral, as 50 Cent would say. Going to the weekly chart, I want to bring to you two levels of interest. Despite the huge move higher that we saw back in June on very high volume, price has retraced the entire move in about 4 months. And on the way down, price did form two levels of interest: a weekly seller's level at $13.75 and a weekly seller's level at $12. Let me open the charts a bit. You have this drop in price, one basing candle, and then the drop out. So leg in, base candle, leg out. And this leg out becomes the leg in, base candle, leg out for this weekly sell level. Now, as you can see, for the past several weeks, almost past 2 months, price has been range bound with attempted false breakouts to the upside and the downside in the process. Now, the best levels to go long is going to be lower. You have this drop in price, then the rally out. And so we're going to mark this level off and scroll down to the weekly chart to see if we can minimize the risk. And this is what I was referring to in terms of the false breakouts to the upside and downside. You had a spike where price peaked this head out and over the upper portion of this range back in October, and then on the downside you had a peak out to the downside in November, early November. Alright, so on the daily chart we see an inverse head and shoulders pattern, and that one did work out to the T of price moving as high as $19 again before returning 100% of the move higher. Now when I look at this level now on the daily chart, there's a lot of trading, and then the move higher is not done on above average volume, so I would be leery of this zone. And so what I will be looking at, if price continues to move down, you can see that your momentum moving averages have converged. So that's a good sign in that price is trying to find a bottom. But what I would look at, if price wants to move higher, we need to see price close above at least this weekly seller's level at $12. If price continues to move lower and comes into this lower zone, then you want to see some type of W pattern on the daily chart on above average volume as confirmation that this low at $8.30 is going to hold. Thanks for watching. Subscribe. Please like the video.